Good morning, everyone. Welcome to the Winpe Ignite PEVC Career Talk series. We are still admitting people, so we'll give it another minute and then we'll get started. A message to those participants whose Zoom name is not on our list of registered participants. Please either update your Zoom ID to match the one you've used for registration, or in case you've registered, please use the link in the chat box to do so. We are ready to start. For those of you who don't know us, Winpe is a pioneering platform driving gender diversity in the investing ecosystem by increasing women's participation as investors, capital allocators, and recipients of investment capital. We work closely with PEVC firms in helping them shape and execute on DI strategies, including hiring more women across roles and levels. When we launched in 2020, and we heard a member PEVC firm saying, "We want to hire women, but we can't find them," we were skeptical because we thought there are enough women keen on PEVC careers. In the last more than 5 years, Winpe has undertaken a number of initiatives aimed at supporting PEVC aspirants, including job bulletins, AMAs with industry leaders, boot camps with recruiters, and career fairs. Through these initiatives, we've also come to realize that the talent pipeline of women for PEVC is much thinner than we would like for various reasons. Ignite by Winpe is a platform designed to support the female talent pipeline in the PEVC industry. Ignite offers online career sessions, masterclasses, job vacancy information, and a profile bank of women interested in PEVC roles, accessible to Winpe member firms in an anonymized format. So when PEVC firms hire, they can access a profile repository for candidates. The profile bank is open to women at all levels, including those already in PEVC. And as I said before, we hide candidate and firm names in the database, and that is shared with hiring firms. We are sharing the form link. Please add yourself to the Ignite repository. You'll see that in the chat box. Please join the Winpe Career Network WhatsApp group that will keep you updated on our sessions and with information on job openings, which we keep posting there. I'm sharing the group link on the chat box. Before we move on to today, a reminder that if we do not find your name in the registration list, we will have no choice but to remove you from the session. So please either update your display name or fill out the registration form. Link is in the chat. Moving on to today, our topic for today is charting your course, lessons from women who've redefined success in PEVC. Introducing our speakers, Ankita Balotia, Vice President, Investment Team at Fireside Ventures, Charu Gulati, CHRO, Everstone Group India, Hemangi Desai, Director for Venture Debt Instruments, Trifecta Capital, Krunali Shah Pinjani, Investor at A91 Partners, Nishtha Kohli, Senior Vice President at Warburg Pincus, Parita Asher, CFA, Principal OJ, Pooja Parmar, Principal Equanimity Investments, Prachi Marwa, Senior Vice President, Risk Capital, Sanjna Tulsiani, Senior Vice President, Investments at Iron Pillar, Sarika Saxena, Managing Partner, IAN Alpha Fund, Shweta Ladda, Senior Vice President and Head of Compliance and Secretarial, Multiples Private Equity Group, Snigdha Jain, Executive Vice President, Assertis Credit. We will now be moving into our four breakout rooms, each featuring three expert speakers. For the private equity room, where we'll have Prachi, Nishtha, and Parita. Early growth, late VC, here we will have Krunali, Hemangi, and Sanjna. Early stage VC with Pooja, Ankita, and Sarika. Operating roles with Charu, Snigdha, and Shweta. Please join your respective breakout rooms to gain valuable insights into private equity and venture capital from our distinguished speakers. Feel free to explore. You can move between breakout rooms during the session to listen in on the different discussions and gain insights from all of our speakers. Some housekeeping notes before we begin. This session is being recorded and an edited version of the recording will be made available for future reference. You can type your breakout room's topic-related questions anytime during the breakout session in the chat box. For any general questions, please post them in the main session and we will pick them up at the end of the session. After the breakout session, please come back to the main room for a Q&A round with all the speakers. Without further delay, let's get started.
Hi guys. I've had a very different career path. Obviously, Sanjna has already given a little bit of color of my background, but the last 4 years I've spent doing investing through venture debt at Trifecta Capital. Before that, my career path was slightly linear. I'd spent about a decade, doing debt investing with ICICI Bank. So I have, throughout my career been more of a relationship plus investing, that kind of role. And, typically, of course, love to take you guys through my approach and journey and why I am where I am. And happy to answer if you guys have any questions on how to navigate this world of investing. So, yeah, thanks. Happy to be here as well.
Thank you. Thanks, Krunali, and thanks, Hemangi. Maybe I can kick off, just get the ball rolling on a few questions. Meanwhile, Ayushi, Kushi, if you have anything, feel free to, since it's a smaller group, I think you could maybe just go ahead, unmute and ask your questions, or if you're more comfortable typing it in, that works as well. But just to kick off, right, I think partly we've all had very different journeys coming into investing between Krunali, Hemangi, and myself. Maybe Krunali, Hemangi, can you tell us a little bit about what attracted you to the world of growth stage investing, how you navigated those early steps in your career, just stepping in? You've both seen tremendous growth within your firms itself. So just a little bit on how you entered and what that growth journey was like within A91 and Trifecta.
Sure. So maybe first part of the question about how I narrowed down on growth and why did I think this was more interesting. So it was a little bit of method of elimination for me, honestly, because seed or early VC for me was very hard. I personally felt like I would want to see some numbers about the business, which can then tie up to the story that the founder is saying, and then use both of it to sort of build my own mental framework of what kind of companies would I be eager to invest in. I think that with only the story and no numbers for me was hard to sort of grasp and understand just the kind of person I am. And hence, early stage investing was sort of something that I was not super inclined on. Also, the pipeline there is very very huge, right? So a lot of the job becomes ensuring that you cover the pipeline fully, which also for me was, I did not want 50-60% of my job to be that. I wanted maybe like lesser part of it to be that, a lot of it to be diligence on whether to invest or not. So, and hence, sort of early was out of question. I think PE was mainly out of question because I was I was not very keen on having a crazy work life where I spend about, I don't know, 14 to 15 hours working. I was sure that for me that was not sustainable, and hence I did not want to go down that path. So hence I was left with sort of the middle-ish area, which is growth stage of investing. So that's how I narrowed down on growth. How did I narrow down on investing? I think I honestly did not. I was actually, when I went for MBA, I was more keen on doing marketing or sales or something. I was keen on joining Unilever or TAS, but I just happened to meet the folks at A91 and I found them quite, I felt like it would be a great place for me to work. There was a lot of culture fit from that standpoint, and hence I thought I'll give this a go ahead. But had it not been A91, I think I would have probably been in a very different career. So it was not like I was always very sure I wanted to invest in.
That's super interesting. And I think you spent some time with multiples as well, which is a completely different stage. So I guess that also helped you maybe figure out that growth is more up your path than something like a late, as you said.
So honestly, at multiples, because I did only 2 months of internship then, and I don't know if it was specific to those 2 months or what, but at least wherever I was involved, those were not really late stage opportunities. So I was a part of Milky Mist evaluation. I was a part of at that point Aqua's evaluation, and then Kisht. So all of these three were more at that point more growth stage investments, and hence I did not really see a lot of late stage at multiples. But what I did at multiples, I really enjoyed that, and hence I sort of was able to narrow down that if investing, then I would want to do growth stage, but whether or not investing was a different question.
Sure, no, that's some really interesting insights. Thank you. Hey, Mangi, maybe do you want to tell us a little bit? Obviously, very different career paths between the three of us.
Yes. Yes. No, I think I'm going to also become a little bit of moderator to hear your story, Sanjna, but just to, give mine. So, no, I mean, I've actually delved into, different parts of finance over my last, 14 years of work life. And, I've seen, like, when I look back now, I do see that there's a very common trend, which I've always gone back on asking myself, what is it that I enjoy doing and what is it that I think I'll excel at? So I think a very important part of my career decisions have really been, asking myself at every point that what is it that I find myself fitting better into and what I find enjoying. And like, for example, like the decision between becoming an entrepreneur versus becoming an investor, if you are someone who loves to get their hands dirty, who loves to be in operating roles, then maybe, you want to be an entrepreneur. But if you are someone who likes to be generic, so for me, like, for example, and that's also something that I used to do when I was at the bank, and also now when I'm investing, what I really enjoy is meeting new people, understanding the different kind of things that people are doing. So I feel like I'm more of a generic person. And of course, like Krunali said, like, for example, I myself do a little bit of angel and seed investing, and I do realize that it's a very different ball game as compared to what we bring on the table when we are doing growth and late stage. But I feel like, just as a career path of being in growth and late stage for me was to kind of obviously know more about the varied things that people are doing, meeting new people, and being so, which is why, I feel like generic was something that I, related to more than being an operator. And hence, investing was something that drew to me as a career path. And that's what I've been following for the last 14 years.
No, awesome. And I think you've had a very different investing thought process as well
Yeah.
in venture debt.
Yeah.
Maybe tell us a little bit about that, right? Like venture debt, I think the thought process is also slightly different
Right.
than equity. You're doing both debt and equity. You need to ensure that you're getting your monthly payments through, unlike
Yeah.
equity, where Krunali and I can say, okay, we have 7 years.
Yeah.
I think the debt investing can have a different sort of pressure where you're basically
Yes.
looking for your monthly payout, maybe after
Yeah.
sort of a 6 month moratorium period. So maybe
Yeah.
a little bit about how that's different.
Yeah, so I think for debt, I feel as if where it's different from equity is that it requires a lot of innovative structuring and also a much shorter time span and for, the outlook on the business. And obviously, we are not looking at, making, and it's also the return profile. So I think what you guys kind of underwrite when you're looking at a 7 year investment horizon is like a 3 to 5x on your investments, whereas from a debt perspective, we are looking at very current repayment capability of the business. And without really going much into detail into what we kind of do to underwrite, but yeah, I mean, what I'll just like to say is that, debt obviously requires a more conservative risk taking capability as compared to equity. More shorter horizons of investment, so slightly more shorter term outlook on how the business would do. But like, where I think where we kind of are similar to a lot of equity investors in growth and late is that, of course, we also just invest in businesses that have product market fit, they that have been, earning revenue for about 2 years. So, from that perspective, it's pretty similar because we are not really just underwriting an idea, but at the same time, that requires slightly more innovative structuring. It's slightly more regulated as compared to equity. So those are some of the factors, but I think it's equally exciting because, like you said, we do debt and equity both. So we take like a shorter plus a longer horizon view as well.
Sure. No, that leads me like well into my next question, which is At this particular stage for all three of us, right, in early growth, late stage, you have to balance your analytical rigor with conviction. There's no company that's perfect. There will be certain numbers that don't always make sense, or they're not where you need them to be. But you just have that conviction that over a period of the investment, they'll get there. The company will get.
Yeah.
So how do you build that confidence to trust your instincts, and how do you balance out the analytical rigor with conviction?
Sanjna, why don't you answer that first? You've been doing this for a while. Yeah.
No,
Go
sure.
ahead.
No.
Share your thoughts.
Devang. No, I think for me, honestly, over the last 7, 8 years, I've realized that no one has a crystal ball, right? We're all doing financial modeling. We're all saying the company will achieve X, Y, Z. As you said, we're all trying to underwrite a minimum 3 to 5x, 30, 50% IRR. But that realization of that number is not just at investing, but that entire portfolio management process, right? So initially, you can underwrite whatever you want. So doing that analytical rigor initially just gives you the confidence and allows you to build a path for the company in your mind as well. For Iron Pillar, we take board seats. So initially, when we're doing our analytical rigor or our analysis, we will see where the company is today. We obviously underwrite a certain path for them in terms of numbers and try to figure out between now to then what can we do to add value, right? One is obviously the founder going ahead and getting the operations right. That's not something that you can do. You can't be there day to day. But obviously, we try to figure out what the gaps are on hiring. We try to figure out how much capital they're going to need very realistically. Obviously, we all want to have a company that needs no capital more than ours. But that's not usually the case. So just figuring out the capital needs. And I draw a lot of comfort in those numbers. So if I know early on it's going to need 50 million, we also need to figure out how much can we underwrite, how much can we pull in from our LPs. Again, hiring, we try to do that from within our network. So I think, partly it's the numbers, and then while you're doing the numbers, just figuring out what things you can do to add value. I think that helps me build conviction. Just knowing that I can help and be part of that process and journey. I think if you leave your investments faith completely in the hands of someone else, that's something that's a little bit rocky, right? Because then it's out of your hands the moment the capital goes to the bank.
Interesting. Very interesting perspective. I actually never thought about it like that, but this is a good way of actually thinking about what else can you do, which you can't see today, but there is a
Yeah.
possibility of seeing it tomorrow. Very cool. Generally, we do a bit of pattern recognition.
Mm,
And hence, like for instance, if we are looking at a BPC brand
mm,
today, then we have seen enough BPC journeys in India, right? To be able to say that, okay, if a company at this scale is showing this kind of economics and spending X percentage on performance marketing, this can go down with scale. So I think what we find it hard to believe is gross margin improvement in any business. But if the gross margin is at a level at which generally we would see other companies in that category operate, then below gross margin, a lot of economics we are a bit more willing to believe if we've seen that in the past being done by anybody else. And if today it stacks up at that level at which somebody else was when they were at that scale, right? Like for instance, if we will see a BPC brand today and say that, okay, at the scale at which they are today, when Mamaearth was of this scale, what was Mamaearth looking like? And are they at least doing a better job than that? That gives us a bit more confidence that, then there is a path which somebody else has demonstrated, and these guys can also probably take to maybe be more sustainable than what they are today. Um, but in sectors that are new to us, like manufacturing, for instance, and we started doing that a little bit. So there we find it very hard to believe. The second area where we find it very hard to imagine is the Zepto kind of outcomes, right? Where you have to, like, even at growth stage, it does need a lot of believing, and how to maneuver around that is something that I guess as an organization we are also figuring it out, right? Where how to be okay with the company having to raise and burn, let's say, 500 million. but still build an eventually sustainable business. Uh, I guess that is a framework that we're yet to build.
Sure, no, that's super insightful. I think just basically saying that if you have conviction in other companies having done it, then you can build conviction that this team can also do it in terms of gross margin. And then yeah, I think there's generally everybody, all investors are now shying away from a business that takes that much capital. I
Yeah.
think everyone's been around here for a, for most of the ecosystems fairly new, but nonetheless a couple of decades in, and everyone knows that maybe something like a Zepto takes a very different kind of DNA than the one that this panel has between A99, Iron Pillar, and Trifecta. Um, Maybe that's something more for like late stage at this point, because I think for Zepto, where they are today, it's very clear they're going to need a fair amount of capital still. And I don't think any of the early growth guys would be able to underwrite or think of it with the right outcome today. So, Hemangi, we're all ready to hear your thoughts on.
No, I think, from my perspective, obviously we built a lot of conviction from, like you said, early flag bearers in each, sector. But more than that, of course, we lay a lot of importance, at least I personally lay a lot of importance on, the team. And a lot of it comes from like meeting the person, the team again and again, getting more insights into how they kind of think they want to execute this. Because, of course, while, like there could be multiple businesses operating in the same segment, but each of them could be on a very different margin profile while being in a certain band, but could still be in a different margin profile depending on how the team wants to execute, what is it that they are chasing, which growth curve they are on, and all of that. So of course I pay a lot of attention to that. And see, I think unlike equity, I feel debt has to be a slightly more intuitive because um loss of capital is much more strenuous on the IRRs of the fund. And the recovery process is also very long. So there is a if there's a default, then there's a post default process also, which we need to anchor on. So, the skills required for that are also very different. So I think, largely in debt, the conviction that we built is obviously not just around the team, but also around who are the investors on the cap table who can, kind of keep supporting the company in case the company needs some more oxygen to carry on, till they kind of break out. So I think it's slightly more intuitive, but then I also feel like, being having been a banker as well for 10 years, it's, intuition is the first and foremost, that you need no matter what kind of investing that you're doing. So, it starts from intuition and then you start building in layers to that to give you the confidence to kind of underwrite it.
No, sure. I think that's helpful, and I agree. I think you can't in this ecosystem where the pipeline is just so large, the top of the funnel is so large. Eventually, if you don't have that conviction with the team, it's very hard to get investments over the line. Every space has at least 10 players doing something similar. So I definitely see that that makes sense. But you spoke about you know a period of uncertainty, right? A lot of companies will go through that. Especially as capital dries up, the Indian macro, of course, will move through cycles. How have you managed these periods of uncertainty when, the outcome of your investment is not that certain, right? It's not immediately visible.
I think, like I think as most of you guys also do, it's really just walking with the founder, giving him that space to breathe and kind of think about how to navigate that period of uncertainty. As equity or debt investors, and especially in growth and late, I feel like we have that added responsibility of being patient and supportive. And that's something that I think we have to carry forward. And, the other very important thing, and I think that also, in my opinion, really differentiates a breakout investor from an average one is the capability to value add and be helpful to the founders, because I think as investors, our job is not just restricted to making an investing investment and then forgetting it and like remembering them once a quarter to just go and say a hi and hug them out, but it's also kind of being able to add value and be strategically significant when they need it in periods of uncertainty. So I think something that really, and I feel like that's something that I've been working on, very very clearly, is being able to create that kind of network and that kind of awareness where if any of my founders need any kind of support connecting within the network, I need to be that relevant point of contact to be able to do that.
No, awesome. I hear you. I completely agree. Krunali, maybe do you have some thoughts on the topic as well?
Yeah, I think Himangi covered it pretty well. So yeah, I would say two things. One, what she said, same thing, that you need to create a network where you become like the first point of contact for the founder if whenever the founder wants help, right? And hence, and be able to at that point leverage that network to be able to help the founder. I agree with that. And the second thing I think is not necessarily always being I think being a founder is a very lonely job, and hence, what the founder wants is somebody they can brainstorm with, right? And a lot of investors tend to be very happy when things go right and tend to be very upset when things go wrong. I think a little bit of more balanced approach where you still try to show the founder the real picture, but at the same time, know, the founder should feel like you're there. I think I think being able to do both of these and managing both of these well is what really drives. Uh, and I think short term ups and downs are sort of going to be there in any kind of business, right? So how to maneuver around it is probably what is critical, and not give it too much weightage.
No, sure. I think that's very insightful. Just finding like balance in your relationship with founders, and definitely obviously the times when they're doing well are the easiest.
Yeah.
And just staying calm and collected during the harder times can be much more challenging since there's usually quite a lot of capital on the line. I think with A91 and Iron Pillar is similar in that we have smaller portfolios compared to early stage funds, especially in early growth and late. We see our portfolios are not as large, so there's a lot more riding on the outcome of every single company. Definitely gets
Mhm.
more challenging to stay calm in those moments. Um, kind of moving away from portfolio companies and bringing this conversation a little bit toward internal dynamics in a firm. Obviously, that's super important. Investment teams are fairly small at this stage. What helped each of you build trust and confidence within the firm so that you can have a stronger, louder voice on the table during IC meetings, during strategic decision making? Krunali, you want to maybe
Um,
jump in?
Yeah.
yeah, sure. Uh, I think first getting the basics right, which is that you need to be the trusted set of hands to do any kind of work, right? So, I think it starts with being able to complete things on time and complete it accurately. Then maybe stretching it to the next level of thinking about what can we do better. Let's say it could be as small as, a consumer survey that one needs to run, or it could be as big as planning the entire diligence process, or maybe figuring out sourcing pipeline, etc. Right? Like just thinking about it as if it's your own organization. When people start noticing that and start realizing you're treating it like your own organization, I think there is a lot of trust automatically that gets built. And then I think a lot of our job is also giving a very unbiased perspective of what we've learned, because we are closest to the ground, right? And hence we will probably pick up something in, let's say, some expert calls that we are doing, or we pick up something from some other industry ecosystem conversations that we've done. I think giving that unbiased perspective back is very important, because a lot of times we might have our own POV on the investment, on whether this is good or not good, right? But as a GP or as a partner, I guess the expectation from them for us would be that, irrespective of what we feel, the quality of work should be equal. So I guess once they see all of this and they see the maturity develop overall in terms of how we think about investment, what kind of frameworks are we developing for ourselves, how are we applying that then? And then, of course, are we, of course, coming up with a little bit of that extra work that we do? Like, let's say if there is something that you are not involved in working with, but you can do a little bit of scuttlebutt and, say that, okay, but, like if it's I don't know, if it's an F&B brand, and you go and speak to somebody at Amazon, and say, oh, but I heard this, that, etc. All of that proactiveness is also sort of goes a long way in people building trust and feeling like you are treating it like your own organization. I think that is the crux of it.
No, sure, I hear you. I think ownership and just moving from super executor to thought leader, right? I think that's I completely agree. Hemangi, anything that you'd like to add?
No, I think both of you kind of pretty much covered this. But yeah, I mean, of course, that's a natural transition, right? As you grow up the ranks, the expectation of, the partners and the fund is for you to be able to strategically add value, which goes beyond just being able to source, build a good investment thesis, and kind of go ahead and complete the investment process. That kind of becomes like your day-to-day job. And a larger part of your KPI also includes some of the other strategic aspects and value adds that you can bring to the fund, whether that is thought leadership, whether that is, your ability to influence and mentor employees, junior employees within the fund. All of that at least becomes part of the KPI as much as I've seen. And I think like mentoring also is a very important aspect of being able to, like go on to the next, because, I think most of us at some point or the other have been mentored as well. At least, I don't know about you guys, but, I've always had at least one significant person that I've always looked up to for advice, at least from a professional perspective. And I feel like that really shapes how I see my professional journey. So I think that's also a very important aspect of rising up and being relevant.
Yeah, no, for sure. I think, just touching on the mentor topic, in fact, how did you identify and connect with the mentors you talked about a little earlier? As you said, they can play a pretty important part. Everyone needs the sounding board, someone who's seen it and done it before. So how did you really go out and figure out, is this mentor the right person for you?
Look, I feel like a lot of times you connect to people, or you feel inspired by someone within your organization or outside just by the mere, of the presence and how they kind of carry themselves professionally. It's not just about achievements, but it's also about, their outlook. You've heard them speaking at some events. I think in my case, like when I was at the bank, I had a lot of senior women leaders who were kind of leading the charge. And that obviously inspired me because, typically in banking, you don't come across a lot of women leaders. And, there's a real glass ceiling that you want to break. And, that really made like a path for me that, okay, this is achievable. And, how are these people being able to do that? How are these people being able to survive at that level, where they have like maybe 10 men who are reporting to them and they've still not lost their identity, or they're being able to be this assertive and inspiring to so many other people. So that really drove me towards those specific individuals. And how do you, I mean, I didn't know if it was appropriate on my part to go and tell them that, oh, I feel inspired, can I can I get mentored by you? But I feel like I found opportunities to be able to work with them closely, speak to them closely, and see how they work and what is their work ethic, their discipline, their way of functioning. And I think all of that, just being in that process of, observing them closely, has shaped up how I, also like behave myself professionally. So, and then obviously here within investing as well, of course, like a lot of us keep chatting, and I feel like it's great to have like a community of women who are in leadership positions, because you don't really always need a mentor who's been in the industry for 25 years. I feel like we all co-mentor each other in a particular cohort of women who are trying to navigate very similar circumstances professionally. So
Yeah. No, I hear you. That's I think like very insightful to say that the mentor is not always someone who's a senior at work. It could be just a close network of people. Everyone has so much to offer in terms of learnings across the board. Krunali, what about you? Is there a mentor who's led you to through the journey so far? How do you think of that relationship?
Yeah, so actually, interestingly, most to what Hemangi said, right? I think people around you, I guess, are the best source of inspiration because you can see them quite closely. And then some of those journeys eventually stay with you, despite not being a part of that organization, right? Like, for instance, during my articleship, the person whom I used to work with closely, who's now a partner at that fund, but back then used to be a manager, right? I have seen his how his working style is quite close, and I have been influenced by that quite a bit. And he continues to remain a mentor for me today. While it's not, I wouldn't say we've explicitly ever called it a mentor-mentee relationship. But you know that you can go back to that person, seek guidance wherever required. Um, and that person also knows that you respect him or her a lot. Right? I guess maybe that's the closest to what a mentorship can get. Similar to that, at multiples, I have actually built amazing mentors. And all of them have now gone to different organizations, but I can still pick up the phone and speak to them anytime. And then I also make it a point to do regular catch-ups with them, so I try to at least meet them once in 6 months, if not once a quarter. And hence there also they know that this relationship is a bit of that mentor-mentee one, because that's the way the conversation flows. While again, at A91, I think, unlike a lot of other organizations where I'd identified, one or two people whom I would seek guidance from, at A91 it's been a larger set, maybe because I spent more time. But I have also realized that within any organization, having at least a couple of people who are who also want you to succeed as much as they want themselves to succeed is important. And because then the relationship there becomes a lot more candid, right? And feedback chain also becomes a lot stronger. So I think I have been able to fortunately identify at least a couple of those people at A91. Uh, uh, and hence I know I'll never be blindsided in my career, if I were to be honest, which is also very, very important to identify, irrespective of any organization, like investing, non-investing.
Yeah, no, I definitely agree. I think having a couple of people in your corner internally, whether you call them mentors, just someone who's watching out for you, giving you candid feedback, and there's just like a feedback loop through the year versus just an annual or semi-annual catch up. For sure, I think that can add so much value, and I think it keeps you motivated as well, having some of those people internally, just being your voice, in a lot of ways. In fact, on this topic, internal mentors aside, Winpe has played such a good role with this. They have a mentorship program for senior women in investing. I was part of that program just this last year. In fact, it completes in the next 6 weeks or so. So they've played such a strong role there, and they match you with someone at a partner level who can help you navigate. Sometimes having an outside voice is as important as having an inside voice. So again, Diksha and the Winpe folks, thanks for having programs like that. I think we only have about a few minutes left. I'm going to ask you just one final question. Of course, if anyone else has some, please feel free to jump in. Just looking back on your journey so far, right? Like a little bit of a closing thought. What advice would you give women who are trying to enter VC and who are trying to chart their own course within the ecosystem?
I can,
Krunali, maybe do you want to go first?
yeah, sure. I think this I had brought up last time also in a similar career talk of Winpe only, that I think identifying the right organizations to sort of enter into VC is quite important. And the easiest way to do that is, you go to that organization's website and you see everybody who's there, and you look at backgrounds of those individuals and see where there is a fit in terms of your background versus theirs, right? Because you will see a lot of pattern in almost every VC in terms of what kind of people build the team together, right? So I think that is important, and that because I have seen that once one has made up their mind of wanting to get into investing, people try and knock every door possible, which might be tough, and you might not see a lot of success if you try to do that. But if you try to be a little bit more strategic, let's say if you know somebody from your college who's eventually joined a VC or a PE, you are able to reach out to them. That is a much better way to approach it versus just while I'm fully in favor of sending a lot of LinkedIn messages or emails. And by the way, I landed up at A91 through a cold email that I wrote at info@a91partners.com, right? So while it has worked out for me, I also have gone through the hard work, and I just lucked out. But if not A91, I did not really have any other fund respond to me through that. So I think going through the route of, knowing somebody there, trying a warm connect is generally I've seen work much better. I think that is one. Second thing is in terms of, prepping yourself, especially if you don't have a background in investing, then in terms of, doing some things by the side that help, one, you understand whether you like investing or not. And then if you like, then it helps the opposite person also know that you like investing. So it could be as simple as taking a few courses at, Flame University has this great professor called Sanjay Bakshi. So, doing a couple of courses with him, or doing your own investing by the side, and maybe, talking about some funds that you've identified, some companies that you've identified in public markets, that I think could also help. Sorry, we have to go to the breakout rooms.
Yeah, I know. I think we're just completely over time.
Yeah.
Bangi, do you have a 30-second answer? We're literally on a clock now.
No, I think, you guys have pretty much covered it, but I just feel like, you need to be dynamic and be open to meeting new people and just having fun. I think that's the most important part of investing.
Thank you so much, you guys. I
Yeah.
think it's been super insightful, even for me as a panelist, and hopefully some of our attendees felt the same way.
We
Thanks so
couldn't
much.
hear much from you though, so
I know.
we should separately catch up for sure.
Oh yeah, definitely. We do a little bit of offline breakout between
Yeah.
us. Thanks so
Yeah.
much, guys.
Thank you.
Thank
Bye,
you.
guys.
Tina, my panel is back.
All right.
I can see them in the room.
Thank you so much, everyone. I would request our speakers and the participants to share any takeaways or insights from today's session that they would like to share, please.
I think one of the key things what I realized in my session is definitely that we really underplay the role of having a mentor. In the US, it is so it's it's really structured that you get a sponsor, you get a mentor, you get a coach, and that's how your career progresses within the company. Whereas in India, at least the women in the workforce, we are still waiting for somebody to come and help and show us that invisible hand rather than asking for it. And that was majority of the questions which were there in my panel as to, how do you go out, ask for help? How do you find the like-minded people who can, irrespective of having any direct connection, they can help you out. And I mentioned to them that, there are many more folks out there who have been through the journey and looking to help the next generation. And all you need to do is reach out. Once you reach out, you will be surprised as to how much help is out there available that you can avail.
I can go next, Tina. I think one of the highlight question and remark on which we spent a lot of time was networking. How important networking is in times today. How do you leave an impact through various channels of networking? And we spoke about various channels of networking that exist today. Winpe has become, that channel today for a lot of aspiring women who are wanting to build careers. But it is a continuous. You can't just network once and leave it at that. It's like a sales journey. In the traditional age of how salesmen would just hound you all the time, you have to do this for yourself to be well networked and be relevant at all points in time with everyone.
Completely agree on that, Charu. Would anybody else like to add here?
I just want to say, Tina, we needed more time.
Point taken, Charu. We plan longer sessions the next time.
Tina, in our session, actually we were doing a short Q&A, and we had to come back to this room. So maybe we could do we could take 1 or 2 questions from the participants.
Sure, please.
If we have 2-3 minutes.
Yes, please. Any of the participants have any questions, please put them in the chat box.
Yeah,
I
you
think
can go
Hemangi
ahead.
sorry for interrupting. I just thought it'd be much easier for me to ask a question rather than put it in the chat box. This is my first WinP session, and I'm so glad I got to have such panelists. But my one question from the session point of view was that, is this session more directed towards people who have already established themselves in this career, or is it like we'll also have sessions for people who are trying to break through into this? Like, because I'm a student, so most of the things that were discussed were a bit I mean, they were more for discussions for people who are already in this field. So I just wanted to know how the sessions are going to be structured, and is it more for people who are already working, or will it also be for people who are trying to, get an idea of how things work and how they can break into this industry?
Hiranmai, let me answer this for you. So we have these sessions happening on a regular basis. This session was more for women who are early on in their career in PEVC, but we do have sessions which talk about various roles in PEVC. How do you enter this the PEVC roles? So the last one was around that. I would suggest that you could go to the Winpe YouTube channel. All of the sessions are recorded, and you would have access to the previous ones there as well.
Okay, yeah, thank you.
Tina, I can take a question on the chat which has come
I
up.
just wanted to add to what Tina said. See, while we might say that the speakers today are women who are in PVC, I think some of their life lessons and some of the decisions they have taken in their professional journeys, uh, those are things that can be applied to any sector. Like when you're talking about leveraging mentors, when you're talking about how you take your decisions, how do you choose your next path, those are things that are replicable. So yes, we do have specific sections and specific topics. I think once a quarter, focused on how you enter PVC. I think some of these are applicable across sectors.
Nupur,
like
actually
to ask
related
a
to your
question.
Nupur, related to your point, there's a question on the chat by Ayushi who says, "Are we open to? Is the PVC world open to hiring ex-founders?" Of course. I mean, the answer is yes. If there is a relevant skill set that exists to join, particularly a PE or a VC team, but the Ps and the VCs are always investing in companies for which we always look at people who are ready to take on any CXO role or any mid-level role, depending upon the skill set you bring in. There's nothing like you can't do if you have the relevant skill set, is my short answer to that.
Thank you, Charu.
I'd love to go and ask a question to all our mentors. Just driving from your personal journeys, if you could shed some lights on, what kind of skill sets are sought after for early fresh graduates looking for PVC careers, and any recommendations for someone like me. I'm a fresh graduate from UCL, from London. So what kind of skills are you looking for in your analyst associates, in terms of both soft and hard skills?
Maybe Kathy, I'll start and maybe others can add as well, right? I think a couple of things that I usually look for when we're looking at candidates, I would say is first is intellectual curiosity. And that goes a long way, right? Like really being curious about wanting to do this job. And that you can illustrate your curiosity in a few ways, right? And some of it goes into more preparedness, right? uh, you should be aware of what is happening in the industry. Like I think like it seems like a very basic thing, but like at least like if you're trying to get into PNVC, like read the papers, see what's happening, who is doing what. Like I think that shows to me a lot of intent, right? That someone who's really curious. Second is being prepared for the interview, and it seems more other motherhood and apple pie, but really, like, first of all, like, a lot of you will have technical interviews. And I think lack of preparedness, like understanding how to build a model, things which are very basic that people will expect, at least on the private equity side. Maybe VC is different. I think preparedness on the technical aspect extremely important, and that is easily done. That is like 1 month of work that if you're looking at interviewing in this industry, you should go ahead and do it. The second thing I would say is prepared about the interview and the person that you are speaking with. So I think it is not like a one size fits all, right? Every fund has a different philosophy, different sector exposure, different kind of people that they hire. So I think doing your homework on the fund extremely important. And I would say last thing is try to speak to people in the industry before you apply. I think, and I said that in my panel as well, like LinkedIn is your source. If you're not connected to people, finding a warm connect and trying to just have a chat before you actually sit across the table for an interview, extremely important, right? Because you can ask some of your basic questions, get to understand them better before it is time to interview. So don't wait till when a recruiter reaches out that now the process is starting. Use the time when someone is not recruiting to get to know them, have a coffee, understand the job, and then you can self-select yourself also, right? What is it that you like, which fund you like, what is the kind of work that you would do. I would say these are some of the things that we look at.
I can probably add from an early VC's perspective, because the skill set that may be required are perhaps 50% similar, but at an early stage, one of the key skill that we really value in somebody's, in addition to curiosity, knowing, having a network, because the deals are happening at such a lightning pace. Being able to build those networks quickly, understanding where the industry is moving, not just that, because this industry is, at least the early stages, wherein there is flavor of the season every 3 to 4 months. Sometimes it's AI, sometimes it's blockchain, sometimes it's consumer brand, sometimes it's consumer tech, and it keeps changing and it comes in waves. So if you're able to pick the right space and be able to build the right network to say, okay, what's picking up, where others are investing, because many a times deals don't even come to you. Like the founder does not reach out to you. If it's a good founder, many people would have reached out to that founder before him coming to the market. So understanding who are those folks who are building, I would just say that adds a lot of value. And that's one, the ability to hustle, build the network fast is something we really value when we hire at an associate stage.
If I can just build on to the responses given by Ankita
Sure.
and Nishtha. Khyati, I'm assuming you're an undergrad. Let me just give you some hard reality as well. While all of it is 100% true, the fact is it's very, very hard to get into the PEVC world if you don't have an experience. There are very few PE firms that give opportunity to undergrads for a 2 year management trainee or a pre-MBA sort of candidates to come in for a period of time. And then most students or most candidates or most employees, after having done 2 years, they uh, go out and do the MBA. or their stint gets over in 2 years, depending upon the organization's policy. So it's hard, but whatever has been pointed out by saying, be aware of which are these firms that have the 2-year program, which are the industries that you like, and which are the industries, therefore, are being leveraged in a particular PVC is very, very important. Otherwise, I'll be very honest, there are only a bunch of firms in our country that exist as PVCs, and there are thousands of students wanting to be aspiring to be a part of this industry. It is a competitive space.
Right. Thank you so much, Aru. Actually, I did my master's from UCL, and I had an opportunity to work with Pooja Parmar, who's also part of our mentors group today. I was a pre-MBA analyst at Equanimity back then with 2 years of experience. I'm so glad to see her here. And now I'm actually making a transition from PE to VC. So if the panel is still open, any comments, any recommendations in making this transition from an early stage to a hardcore private equity late stage deals?
Then it's just about getting an opportunity, Kathy. I think you have the right elements really. It's really about which sector are you interested in, and figure out which PEVC is doing those sort of sector investments and reach out to them. It's also about timing, because you would understand that these teams are very, very lean across the PEVC firms. Most of our firms are like 10, 15, 20 people at max. Attrition is very, very low at the analyst associate level because they are rotating amongst ourselves only. So you just have to find the right timing.
Got it. Thank you so much, Aru. Thank you.
Yeah, I strongly recommend Kathy for all the PE folks listening.
Thank you so much, Pooja.
Thank you so much. I think we'll move ahead. We don't see more questions in the chat box, and I'm sure people have a lot of things and people don't want to end the conversation, but we have a paucity of time. Thank you everyone for joining us. We hope you found the session useful. Thank you to our speakers for such an insightful session on various topics. I'm launching a quick poll now. Please take a moment to vote when it appears on your screen. Please select your answer and click submit. All right. Before we wrap up, I'm excited to share that registrations for Winpe's Leadership and Summit Awards 2026 is now open. This is India's foremost forum for leaders shaping the future of private equity, venture capital, and entrepreneurship, bringing together investors, founders, and industry leaders for thought leadership, recognition, and meaningful connections. Over our last 3 editions, we've had more than 1,300 attendees and close to 300 firms come and learn from 160 industry stalwarts. You can find all the details and register through the link that we just shared in the chat. We have multiple discount options, especially for women who participated in Winpe events. So please don't hesitate to write to us directly at info@winpeforum.com, and we'll make sure to assist you. We love to see many of you join us at WLSA 2026. It's shaping up to be an incredible event. These Winpe Ignite online sessions are available on YouTube. For those of you who've missed the previous session, you can catch them up on YouTube. We've shared the link in the chat box below. Do join the Winpe Ignite WhatsApp group to keep yourself updated on more such sessions, job openings, and masterclasses. And do join our database that we share with our member firms to support their hiring processes. We've already shared the link to join the group in the chat box. And lastly, don't forget to share your key takeaways of this session over social media with the hashtag Winpe, Winpe Ignite, and don't forget to tag Winpe. See you everyone at our next talk coming up soon. Thank you so much.